Hello guys, welcome to Progress FS YouTube channel. In this video I want to introduce to us how to use the 300 and 100 support and resistance moving average together with the 210 and 150 EMAs for 1 minute scalping strategy. So here you can see how the chart looks. So while I show you how the chart looks, I will also introduce to you how to use the 210 moving average to identify a false alert with the 300 and 100 moving average, and also how to use the other one also to identify a false alert between the two. So here you can see okay, let me start somewhere far away, so we keep analyzing and coming until we get to the final point. So like in this place, you will see that the two moving averages crossed at this point. So, and of course, in case you want to learn how to set them up, you have to watch the previous videos which I posted in my channel, YouTube channel, and of course to learn about the ideas. So your point here and your interest here is to always wait for the market to retrace to this point, then you make a sell as usual, just as in the case of the bigger time frames which I introduced. So in the 1 minute chart scalping strategy, you just keep making entry whenever it retraces, and once you make your entry, even if it is less than a dollar, euro, rand or ZAR, whichever currency you're using, once it will giving you, especially for this is for the purpose of this particular week, which I told us that we'll be scalping, and then also learn how to increase to grow smaller accounts. So if you have gotten just a dollar, just a euro, just a pound, just a ZAR or rand, you close the trade, and of course wait for another entry opportunities. Of course, I will be assisting to identify where the market has gotten close or where our entries are supposed to be made. So until when these 4 moving averages started gapping another seriously, that is when you can make an entry. So for instance, you made a sell here or somewhere here, then that is when you wait for the market to go as much far down as this. But so long as they have not started gapping another, especially as you can see the black, which is the 210 moving average, is seriously lagging between the 300 moving average. So, or lagging with the 300 moving average. So if you see something like this, once you make an entry and the market moves a bit, take your profit. So because of course it's going to retrace again, do not be greedy. So then in this kind of place, once you see the 210 moving average attacked the, or either comes close or cross with the 210 with the 210 moving average, which is the black color, crossed above or below. In the case of up and down trend, this 300 moving average, start being careful about the market. It's likely that it's about to reverse to uptrend. So, but the first place it crossed, you still have to make your sell entry. Yeah, but when you started identifying that it remained inside, that is the 210 moving average is running between the 100 moving average and 300 moving average. While you are making your entry, like I introduced earlier, once you make the entry, no matter how small the profit is, take it, because anything can happen by sudden. As you can see in this place, it's finally reversed. So once it reversed, you continue with the same strategy. At first, once you see this place, it says this place that the 300 and 200 moving average crossed by, the 300 and 100 moving average crossed by itself, above themselves, and you confirm that this 200 and 150 moving average also crossed above themselves. That is when you can start making a buy or sell in the case of up or down trend with confidence that the market is trending up. But once this 300, because it used to, the 300 and 100 moving averages used to cross earlier before the 210 and 150 crosses. So if these two crossed and these two did not cross yet, do not join the trend, because it may be false alert. So we do the same thing, and imagine this is the first place, the 210 moving average crossed below or started lagging with the 300 moving average. So whichever trade you are making, see entries, you are making around this area, you still have to be very careful until when you see that it will pulled out from here. That's when you can make entry with confidence. So in this place, you can see it crossed again below. So you start being very careful. But of course, like I said, whenever it crosses the first time and retraces, do not be afraid to make entry, like a buy or sell in the case of downtrend. But once it moves and you took your profit, be careful, because the market is about to reverse. As you can see what happened in this place. So let me quickly go and of course show us where false alert is in the market. You see here, when the two of them crossed here and you started making the same entry at this point. So like I told you, once these two moving averages, that is the 300 and 100 moving averages, crossed above each other. Of course, this place is always advised not to trade. But for those of us who are very radical with the market and always wants to make everything or remain in the market, whether good or bad. So by right, you are not supposed to trade from here, this particular area, until you see a better confirmation. But in case this red and blue crossed and this black and yellow did not cross, do not make a buy or sell. You wait until you confirm the direction of the market. As you can see, after all the running around, it pulled back again with the black and yellow ragged between itself, because as you can see here, at the end of the day, it did not cross above. So, but it's more advisable to actually wait while something like this is displaying in the market. So until you find a major cross with clear view, as you start making your buy again at any retracement. But of course, in order to identify this retracement properly, you have to watch the videos I posted earlier in my YouTube channel, because it will assist you to know what you will see before you make a buy or sell in the case of downtrend. So the same thing played out in this place. After crossing first, market pulled up, returned, and it crossed down, forming downtrend. So it's in this place, pulled inside again, and lagged for a while and pulled out again, pulled inside once again, and the market crossed, showing an uptrend. But I want to show us a major false alert. When you see a major false alert, you see this kind of place is not advisable to trade. So when you see a major false alert, you have to be very careful what you do in the market. Let me see that major false alert, because all these ones you can as well take small entry and of course take a peep. But there are some major false alerts I need to share with us. Okay, look at it here. You see, in this place the market crossed and retraced while you make your entry from here, and it retraced again. You make entry from here. The first major crossing between the 210 and 300 moving average here, you make your buy. Like I said, you shouldn't be afraid the market will not reverse immediately. You make your buy and take your profit like that until you see a major false alert. Look at it here. So check out all the lagging between the four moving averages. It finally did not cross. So that's why whenever it's happening like that, you have to be very careful. Two things: to either opt out of the market and wait for the market to cross and give you a clearer view of the trend before you join, or wait entirely without trading. Now you see finally here the red and blue, that is the 300 and 100 moving average, finally crossed here. Yet the yellow and black, which is the 210 and 150 moving average, did not cross to indicate a downtrend. You see, this is a major false alert. So you have to be very careful not to join immediately the red and the red and the blue moving average crossed until you confirm that the yellow and black crossed at the same point or immediately after it, so indicating a strong sell or buying a trend. So before you join confidently, so there is opportunities must definitely come out. So you mustn't be inquisitive. Oh, why did I not make entry and I have to wait? No, you must wait if you don't want to be hurt in the market. So there are a lot of more clearer major false alert. Let me see if I can find it. Okay, look at the major false alert. One of the major false alerts. So why the black moving average cross below the 300 moving average? It's all, like I told you before, it all ran in as if it's going to form a powerful downtrend. You can see the 300 cross below the 100 moving average, yet the yellow moving average and the 200 moving average did not cross. Even this an attempt here which might convince you that it will cross or about to cross. Imagine if you joined the trend from somewhere here, it took you back. It will take you back to uptrend. So you can see, despite all the lagging it all did here, it did not touch itself, and of course still pulled up. So that is the major false alert. Why using the 1 minute uh, 1 minute scalping strategy? So you have to study the video clearly. You see another false alert. Look at it here. But this one is more obvious than this. So you study the video clearly. Look at another false alert. Look at it. After all the lagging, they still did not. This one crossed here, but yet this one did not confirm the movement. So study the video clearly, and of course get ready. Let's see how far we can make the market with all our small accounts. And make sure you watch my previous videos in my YouTube channel to also learn many other strategies which are very useful as well. And of course, subscribe for more notifications.